Good morning, everyone, and welcome to the European crossover webinar. And we are seeing the euro trying to stabilize at these lower levels after we saw that sell-off on Friday, obviously precipitated from the stronger jobs report. You can see here we took a little bit of a dip here. But right now we're starting off on a relatively quiet session overall. Let me take a look here with the S&Ps. They're still relatively close to the highs. They opened up pretty steady in the Asian session, and then after a short time they took a dip from around 48-ish or 47, dipped around 41, and we're kind of holding a little bit here, but really no major changes. Gold is just a bit weaker, but gold been under a little bit of pressure after that fall off, and once again, obviously precipitated with the jobs report. And crude oil still holding up here close to $59. So overall, a quiet start to the week. Let's take a look at some of the other pairs here. And cable, we've certainly gone and seen another upside move in the cable. Here we go. And we'll get into the analysis and what we think we may go on and get to with cable. But another new high here in cable. Moving on to the calendar, we are seeing coming into today. We do have Mexican inflation, core inflation coming in today at 7 a.m. Eastern, followed by Canadian housing starts at 8:15 and Canadian building permits at 8:30 Eastern, both Eastern time. And then in the States, the only thing we have is employment trends. That's going to come in at 10 a.m. Eastern. That's all that we have as we come into the States, and relatively light counter, obviously fairly quiet start to the session. We'll go in and take a look at as far as any news that we have here. That's even a bit sparse also, so we're going to move into that. So it says Australian New Zealand dollars underpinned as speculators bail out of shorts. The Australian and New Zealand dollars clung to recent gains on Monday as speculators cut back their short positions, though upbeat U.S. jobs data put a cap on further progress in the near term. The Aussie was already at 68.34, having repeatedly failed to clear resistance around 68.60, while chart support lies at 68.13. The Kiwi stood at 65.55. After touching a 4-month top of 65.76 last week. Immediate support is at the 200-day moving average at 65.40. A run of better economic data has led the market to sharply scale back the bets on rate cuts next year. A move in February is now considered just a 12% probability, and the market has only 12 basis points of easing priced in for all of 2020. Adding to the pullback is speculation New Zealand's government will announce a burst of fiscal stimulus in a half-year review due on Wednesday. The government is set to loosen the purse strings and provide a much-needed boost in infrastructure spending following years of underspend and rapid population growth, said Jared Kerr. Exporters beware, he added. The Kiwi may be on the march back to 66 cents. The euphoric trading has solid momentum and is likely to continue unabated into 2020. Adding to the pullback is speculations. Okay, we did get to that part. Speculators have recently been forced to cover wagers against the Kiwi and the Aussie. IMM data showed Kiwi short positions fell by 9,000 contracts to stand at 27,000 last week, with the Aussie also down 9,000 at minus 36,000. Markets have already gone the other way on the RBA, fully priced in at least a quarter-point cut by April. Domestic data is consistently disappointed, yet the Conservative government of Prime Minister Scott Morrison has rebuffed all calls for more stimulus, choosing instead to run budget surpluses in what is effectively a tightening of fiscal policy. The Australian government is also expected to release its half-year fiscal review next week, and they'll likely have to trim forecasts for economic growth and wages while holding its surplus projections. Australian government bonds eased a little bit on Monday, though it was mainly a knee-jerk reaction to stronger U.S. job numbers, which hit treasuries on Friday. And on to the dollar. Okay, the dollar bolstered by U.S. jobs data, markets look to trade talks. And the dollar held firm on Monday after data showed surprise strength in the U.S. jobs market, but the currency was restrained from moving higher by worries about an escalation in the U.S.-China trade war. The dollar index stood almost flat at 97.70 in mid-Asian trade after rising 0.3 on Friday. The euro traded to 105.75 after hitting a one-week low of 10.39 on Friday. The dollar changed hands at 8.58 yen. It is lifted up to 8.92 on the U.S. jobs data before losing momentum. U.S. non-farm payrolls increased by 266,000 jobs last month, the biggest gain in 10 months, while the unemployment rate ticked back down to 3.5%, its lowest in nearly half a century. Those figures suggest that the Trump administration's 17-month trade war with China, which has plunged manufacturing into recession, has not yet spilled over into the broader U.S. economy. Still, investors think the change of trade tensions escalate further, especially if Trump goes ahead with planned tariffs on some $156 billion worth of products on December the 15th. The market has already largely been working on the assumption that those tariffs, which cover several consumer products such as cell phones and toys, will be dropped or at least postponed, given that Washington and Beijing agreed in October to work on a trade deal. Markets are sensing that both sides want to avoid the collapse of the negotiation, judging from various news headlines, says Kaishugi Kaida. So the main scenario for the dollar yen is to test mid-109 yen levels. Top White House economic advisor Larry Kudlow confirmed on Friday that the 15th headline to impose the tariffs is in place, but added that Trump likes where the trade talks with China are going. China's exports shrank for the fourth consecutive month in November, underscoring persistent pressures on manufacturers from the Sino-US trade war. Elsewhere, Sterling traded at 31.43, not far from a 7-month high of 31.66. The currency has been bolstered by expectations that Prime Minister Boris Johnson's Conservative Party will win an outright majority in the upcoming election on Thursday, thereby ending a hung parliament and political paralysis on Brexit. The Conservative Party extends its lead over the Labour Party to 14 percentage points, up from 9 percentage points a week ago, an opinion poll by Survation for ITV's Good Morning Britain showed on Monday. The markets now think the Tories will win, but if they fail to win an outright majority, that means essentially nothing is different from now and be a fairly big shock for the market, said Minoru Uchida. The Canadian dollar traded 32.55. The loonie shed more than 0.5% on Friday, following data showing the Canadian job market losing a surprise 71,200 net positions in November, when economists expected a gain of 10,000. So with that, we're going to move into our analysis, and we're going to start off with the euro. And bear with me. The euro says the euro finished last week, taking out the prior 4 daily closes, placing the pair on the defensive. Major support comes in at 10.20 with a daily close below, sending the pair quickly to 9.55. Bulls need a daily close above 11.03 to reestablish the bullish bent. So, I mean, if you look on here, a little bit closer look, You can see here that when we came out here, we took out these 4 daily bars and really put the market, as I said, a bit on the defensive at this point. Opening the door for, a bit of a challenge lower here. Obviously, we got some key support coming in at 1020, and we've done as low as 1039, but as I mentioned, it's a bit of a mixed bag at this point. The dollar index, and we'll get to that, certainly didn't take advantage of the much stronger than anticipated non-farm payroll report. So major support comes in at 1020. So we're going to use that as our bias chart in case we do go on and test a bit further. And on the upside, looking here with the euro, we do need to go on and get back above 1103, but where's resistance going to go on and be? So we're going to take a look in here, and really that it's going to be key, because really anything up into that point is really just going to be viewed as a selling opportunity. So resistance at this point is going to be 1103. If we close, let's say we close at 1080, that still doesn't change anything. It would certainly go on to help a little bit, but we need to get much further than that to actually see, like I said, we can bob around, but the real resistance is going to come at 1103 and the support down here at 1020. So we'll see where we stand at that point, but we're starting off the week a little bit of slow mode. We do have ECB on Thursday, so. Let's go and move into the cable. So the cable's upside breakout of the 6-week consolidation zone targets a move to 32.45, confluencing with resistance of 32.65. Support is 30.50, followed by 30.05. So what I'm looking at here is, you can see that little right here. You can see this big old consolidation that we had. And we talked about that. We referenced it a couple of times last week. We'd already challenged it 1, 2, 3, and on the fourth finally broke higher. We're running here at the 50%, but what I've done is I've actually taken the range of this zone here and extended that, and that projects a move to 32.45, which would also confluence in here with a resistance level that comes in at 32.65. Now, in the meantime, we had been looking for this level to be tested right in here, which is 32.08. That's the immediate resistance. So we're going to go with 32.08, but we're looking potentially for a move to between 32.45 to 30.65. The immediate resistance that we have right now is going to be 32.08. And that was the same resistance we had from last week. Now, on the downside, let's take a little bit closer look here. It's going to come in right there, 31.31. Still ways off. And we can even register 30 minutes. This thing has run up so far. See a lot of volume coming in right there. Yeah, it's going to come in right there at 31.50. Well, we're already 31.62. Actually comes in down here at 31.25. So it's going to be 31.25. And we'll move into the Aussie. So the Aussies consolidated in recent gains at 68.31. The pair needs a daily close, and that's after they rebounded from 67.71. But the pair needs a daily close above 69.14 to garner upside interest. The support comes in at 68.05, followed by 67.90. So, we had already come down here and tested. You remember the days ago when we actually had this fake out. I wouldn't call it a fake out, but we closed on here on a Friday, and then we spent the rest of the week just challenging higher. Now, this was key here, but we're just kind of consolidating gains. We're no real big movement here for the time being. So it's going to be 68.05 for our support. And this period needs to get above 69.14 to really generate some upside interest. Resistance in the meantime, though, is going to come right there at 68.46. We'll actually give it a little bit higher here, and actually going to, with all these touches here, go with 68.55 on the upside. Let's go and move into the Kiwi. So the Kiwi finished the week with 5 straight successive higher closes. The player closed above the value level of 65.54. Resistance is just ahead at 65.97. Confluence was 65.87, which is a 50% of the move from 62.03 to 69.70. Support comes in at 65.24. Followed by 64.93. So we already had a pretty nice upside move. You can see here 5 straight successive closes. Just a bit of a pause here. I mean, we did close just a hair above the pink line, which is right there, 65.54. But we do have that resistance coming in at the 50% at 65.87. Confluence with this level at 65.97. But it's within reason to expect it to take a bit of a pause here where we're at right now. So we'll go with, I don't know that we're going to push even higher at this point to challenge right now at the 65.87. We've already come quite a ways already. Looking here, you can see where they ran into resistance right here on this high here. See that right there where they ran up there. But I tell you what, we'll go on and go with that 50%, which is 65.87. And support comes in at 65.24. And let's go and move into the dollar CAD. So the dollar CAD rebounded post-jobs data, finding resistance at 32.72. Bulls need a daily close above 32.09 to reignite the upside. And I don't know why I put 32.09, but I meant to put 33.09 to reignite the upside. Support is 32.05. A daily close below allows for the move back to 31.36. So for right now, it's actually, the high is actually going to be the high that we saw on Friday. You can see that pink line coming up. That's going to be the immediate resistance here. Well, I'll tell you what, we'll give it a little bit more room here. You can see these touches coming right across here. So it's going to be easily right there, 33 even. But they need a daily close above 33.09 to get things going. So it's going to be 33 even on the upside for the resistance. And on the downside, we had 32.05, but I think that may be a little bit too far off. Nope, that comes in right there. So we're going to go with still a pretty good pullback. Right there. 32.17. And with that, let's go and move on to the peso. So the dollar peso has relented its gains. Recent gains is on track to challenge the pivot of 1923.6. It looks like we just did it actually already. With further support at 1918. Resistance is 1938. So you can see here, I mean, this level has been so important over the past 3 months, actually longer than that, I actually say almost over the past 6 months. And here we are, we just turn around and come right back down here and challenge this 1923.6. Further support is going to be 1918, but we already had, it looks like we're working on a 5th day of losses, and this should provide some support, and we're starting to see a little bit of a bounce off of that. So it's going to be 1923.6, the big pivot. And resistance will be at 1938. If we do break lower, we're looking for support at 1918. But we probably should see a little bit of support coming in right there. Let's go and move into the dollar yen. So the dollar yen closed the week on its lows after breaking below the 927 pivot last Monday. Minor support comes in at 828, followed by 805, with resistance coming in at 890. It's going to be 887. So that's going to be resistance at 887. One moment. And support is going to be 828, followed by 805. But you can see here, we closed 2 Fridays before above here and actually got things, going above this pivot, kind of held there. And as we broke below that pivot, we talked about a move and, targeting 851. We got that. The market kind of bounced up a little bit. Here we are rolling back over again. So 887 on the upside, 828 on the downside. So the dollar index rebounded on Friday, following a resilient jobs number with upside revisions. The move was not enough to close above the key resistance level of 97.89. The jury's still out whether the buck will reclaim its bull mode. The market remains open for a test of 97.20 unless 97.89 is taken out on a daily close. So one of the things we were referencing, I was talking about the euro, is it's starting off a little bit slow, but it's still holding okay. And I think, like I said, when you think about the strong jobs data number that we saw, 266,000, and there was an upside revision. I know people reference the GM workers coming back from strike, but we still saw the upside revision. So with that, you would think that this market would have been able to close above 97.89, and we simply haven't been able to do that. So they need to get above 97.89 if they're going to go on and try and make some type of realistic stand. If not, we're still looking for a move to 97.20. Now, in the meantime, support will come in right there at 97.37. And resistance on the upside will be 97.79. And with that, let's go and move into the cross rates. So the Kiwi yen has rallied 200 pips over the last 10 trading days, stalling into the zone of 71.45 to 71.72. Further resistance comes in at 77.77. You can see that the 78% of the move of 66.30 to 73.25. Support comes in at 71.02. Followed by 70.85. So you can see here, we've rallied right into the zone here. A lot of trading here into this zone. So we're looking for the market to ease back or stall a little bit. And certainly you're seeing that. We're actually seeing this market pare back a little bit today. Now we did go on and notate here that support comes in at 71.02, followed by 70.85. We're going to go with the 70.85 because we're almost at the O2 anyway, and looking for them to probably take out some stuff below 71. So we're going to go with 70.85 for support. And the upside is going to be right there at the bottom of that zone, which is 71.45, right in here. That'll be today's resistance. That was actually resistance for Friday also. So let's go and move in now to the Euro Yen. The Euro Yen finished the week on its lows, closing below 2030. The immediate target is 1971, followed by 1926. Resistance comes in at that same 2030, followed by 2077. We're trading relatively quiet today, to say the very least. And we know that the euro's been relatively quiet, obviously, across the board. But as I mentioned, we're looking for a move down here to 1971. That's actually going to be our support. And what was resistance now becomes, or what was support now becomes resistance, and that'll be 2030 now. And let's go and move on to the euro on. So the euro has its way with both the bulls and the bears following Thursday's up day, then followed with a, you can see that, a bearish engulfing bar on Friday. The pair will need to test 60.95.71. Resistance comes in at 62.20. We're just about there, and a daily close above 62.50 is needed to place the bulls in charge. But you can see, look here, when we break down here on this bearish bar, coming here, it looks like we've got an inverted hammer. We finish up strongly. We didn't take out this level though, but we finished, had a good strong day and looked like, okay, now we're going to make a stand. Turn around and bearishly engulf this. So my take is, I think we're going to have to make this move down here to 60.95 to challenge this. I mean, I can't believe anyone's going to be bullish here unless you had their stops below these lows. Is probably not too thrilled about where we stand right now. We shall see, but resistance comes in at 62.20. And support, we're looking for a move down actually to 60.95. I apologize. I meant to say, well, actually, we're going to come down there, but we're looking eventually for a move. But support today is going to come in right there. You can see these touches coming right across here. It's going to come in right there at 61.42. But we're still looking for a move eventually down to 60.95. So 61.42. And we'll move on to the Euro Kiwi. So the Euro Kiwi is tested 68.06, find a modicum of support. The pair is quite oversold and a bounce is warranted. Support comes in at 68.06. You can see where we're at that level. We actually tagged that. And we're looking for a down move on this and that. You can see the target where they came down here and tested that, and so far they're kind of holding above that, followed by 67.70 below. Resistance comes in at 69.42, followed by 69.65. Well, 69.42 is a little bit of ways. We're actually, if you look in here, we're tagging the bottom portion of this bar, but that's going to be resistance, so we can see a little bit of a jump in here. So once again, it's just going to be trading in between these two levels, 68.06 to 69.42, and that's where our support and resistance will be bracketed. Let's go and move into the Aussie yen. A lot of these moves, just like Blake was saying in the week ahead video, I don't think we're going to see these moves matriculate until we get about halfway into the week. So you can see here that we're trading in relatively quiet ranges. Even the cable, which has made new highs today, it's still trading in a relatively quiet range. So let's go on and move into the Aussie yen. So the Aussie yen is consolidating recent gains above 74.02. A break below sends a pair to 73.55 with resistance at 74.73. So you can see here, we're just hanging on here. And we did get above 74.02. And we try to make a break a little bit higher. We've rolled back, and here we are testing 74.02 again. My thought is we'll probably potentially can come down here. To test those stops here, which would take us down to 73.75. So I probably want to test those stops at 74. So support, you'll find support at 73.75. Should see a little bit of demand coming in there. And resistance is going to come in at 74.38. And I can show you right. Coming in right there. So 74.38. Let's go and move on to the guppy. So the guppy continues its descent into the major level of 43.36. Support is 41.58, followed by 40.98. So you can see that 43.36, that's pretty clear, and some stout resistance. Look at that coming across. So at least for today, this is where resistance comes in, 43.36, which is the same resistance we had on Friday. Support then at this point, I don't know if I want to put it all the way down to 41.82, because that's almost 100 pips away. Let's take a look at this on a little bit closer basis. I think that's pretty clear right there. Comes in right there, 42.40. And that's the same support that we had on Friday. And let's go and take a look at the sterling odd. Well, we are gaining some more here on that. I mean, we're higher in the sterling pairs anyway, but well, obviously the guppy's just a tad bit lower. But you can see here, not only is the cable been higher, but look at the sterling versus the odd here. Still potentially, still gaining some steam, even though we've even gotten past this 127% extension here. So the sterling odd has an eventual target of 94.08, but a pause is warranted. The pair has reached interim resistance of level of 92.58. Well, heck, we're at 92.88 right now. Confluencing with 92.40, which is 127% extension of the 85.47 to 90.95. The support is 90.58, but boy, that's a long ways off, followed by 89.75. Well, we still continue to go and move higher here. Let's take a look here. The only thing we can go with is, let's take a look here. The 161% comes in at 92. Oh, 94.28. Now I'm looking for 94.08 anyway. The only thing we can go with right here is actually, I'm going to go like with with some hitting some stops above, which would be 93. So I'm going to go with 93.12. 93.12 as an area where they maybe hit some stops and take it to. So let's go with 93.12 on the upside. But this thing is stretched here just a bit, to say the least. You can see the significance of here, this 92.58. See that right there? Coming across. So decent little level here, right there. See that? But they're still pushing it higher. Let's go on in as far as support. Let's go and move into the 2 hour. Support comes in right there. 92.11. Now let's go move into the other markets. Well, S&Ps continue to remain higher, and this whole thing is going to keep going on and on and on. And I actually took a couple of shorts on Friday, and I got stopped out of both of them. And my thought was, I played it pretty good on the way down, and talked about this 30.74 and all this. And my thought was, we'd already rallied. Remember, we talked about the importance of 31.23, 31.28. We'd already come into the 30s, and we were still pushing it further higher. I thought we would end up pairing back here, probably to about 31.20, 28, maybe between 28 and 32. But this thing still remained. Although I have to say that the NFP numbers were rather stout, but it's more of a play on the whole China headline situation. But my thought was, despite all that, my thought was, obviously wrong at the time, was that this was such an important area. Remember I talked about this 31.23, a little bit of a stretch here to 31.28, that once you got into the upper 30s, like 38, that was pretty much all she wrote, I thought, and it would come back in. And even if it did get up to 42, 44 maybe, we'd still come back in, and it pressed it even higher. So, and we're still holding up here relatively strong. So I don't know how long this thing's going to keep on playing out. I was a bit surprised here to see it stay like that. We're still higher, probably susceptible to a pullback, to be quite honest with you. There is some resistance right now, 31.46. But we shall go on and see how that plays out. Crude oil still remains relatively high, around $59. Interest rates, obviously, we've taken their a little bit of a toll after those NFP numbers. Gold it's still holding up relatively well. We'd gotten below, and was on the spot, that 1450 area we climbed up before. And you can see here, we had that support down here for 48. This was a couple weeks back, maybe more than two weeks back. We took a dip back. We held it, which is key. We try to break above it. Key support coming in on the spot's going to be right there, 1454. Very key support. But a lot of these moves, I don't think are going to, as I mentioned, going to matriculate until we get further into the week. I think Blake pointed that out himself on the week ahead video. But that's where we stand right now. Thanks for joining us here on the European crossover webinar. Good luck trading. We'll see you in the chat room.